Good morning. I'm Pete Najarian. This is the take for Market Rebellion on this Tuesday morning. I got a busy day in front of me. I've got the halftime report. I've got the 5 p.m. show as well with Fast Money. But before that, let's get to what was happening yesterday because the disconnect continues, or at least it did continue. And we were seeing a pretty interesting trade yesterday. So what did we see? We saw the Dow, which started off the day pretty strong. It accelerated, hit new all-time highs. And then in the final couple of hours, bang, it just started getting hit to the downside, dropped about 260 points, actually finished down 35 points on the day. The Dow was generally holding somewhere in that 300 sort of a level for most of the day. And as I say, final 2 hours, some pressure, some selling, certainly getting a big hit to the Dow. Now, the Nasdaq, on the other hand, it was weak. It was steady. It held on about 200 points for the majority of the day, actually added to that in the final hour or thereabouts of the day, down another 130 some odd points, actually finished the day down 350 points. So a pretty substantial move to the downside for the NASDAQ, and the hit to a lot of those high multiple type names, no multiple type names, and the rest of the tech names themselves. But it wasn't just tech. Now, tech, it was Apple and Microsoft and Tesla and Salesforce, those big names, of course. But it wasn't just tech. As I say, tech was down about 2.5%. You also had consumer discretion. That was getting hit a little bit yesterday. Energy started off really, really strong. That actually finished very close to flat on the day. Materials turned negative after having a strong start. So you can kind of understand and see what was really moving the markets themselves underneath from these big ETFs that we talk about each and every day. But it was the semiconductors that were getting hammered. You know, I went through the list of all the various names. Why don't we take a look at one of those names with Qualcomm? And when I look at Qualcomm, I look at a name that it's solid, it's strong. We all know the storyline. We know why it's so, there's that bullishness around it right now. And yet still some heavy pressure as folks are more and more starting to rotate out of some of these semiconductors, or at least trimming some of their positions. Skyworks was down, Micron was down, KLAC Tencor was down. You take a look over at Lam Research, and we talk about Qorvo occasionally as well. All those names, but it was Qualcomm that really stood out for me. Then you look over at the biotechs, which was down about 3.5% or something close to that. Moderna, when you look back and you just say, okay, a week ago, this stock was around the 180s. It actually was near 190 and then pulled all the way back this morning. We were close to 150, although it's rallied back off of that number. But certainly all kinds of pressure on Moderna and the biotechs, and that certainly adding to what we were seeing yesterday in the NASDAQ. And we did get a nice rebound so far this morning. We'll see if that holds on because we've had a really bouncy day. 37.5 million contracts yesterday trading. Not a bad day. Some nice volume. That's in the derivatives markets. I'm talking about options. I'm talking about calls, puts, and all that kind of thing. So really, really strong activity there as well. So we get into today. There's pressure everywhere. You look over at the Dow, it's down about 280 points in the pre-market, but it was the NASDAQ down to about 270 points early on. And that's, again, sort of feeding off yesterday's feeding frenzy to the downside. So we open, we're about the same on the opening. You start to shift around a little bit, and the next thing you know, the Dow's just getting hit a little bit more and a little bit more and a little bit more. And last I looked, we were down about 500 points. I'm taking a quick glance, down 567 points right now in the Dow. This has been a very, very fast cascading move because at 9 o'clock, we were down about 250 points on the Dow. Now, we rallied back really nicely in the NASDAQ. We were actually down about 80 some odd points right at the top of the hour. Now we're back down about 200 points, call it 206 points to the downside on the NASDAQ as well. So it was a very brief rally, but really off of those lows, a pretty impressive rally, and now giving up some of that as well. We got a long day in front of us. We're an hour into the day, but you take a look at the volatility index and you got another big spike today. We had that spike. We were just talking with Lee Cooperman last night on the roundtable with Market Rebellion, talking about volatility and some of the moves that he makes. And he does trade in the derivatives markets. He finds himself these days a little bit more selling options against positions and not as much, it sounded like, of buying. Well, that was one of the questions we had yesterday was, hey, look, when volatility index gets down towards 17, are you looking at all to maybe do some buying? And it didn't sound like that was something he was looking at doing. And when I say buying, just that implied volatility. When you look at the VIX, the implied volatility of a lot of those names comes down along with that VIX and gives you some opportunities. But so today, a nice spike. We got up above 22 on the VIX. We've been holding somewhere, call it in the 21s. We'll see. But as the market sells off, we might start to see that 22 level again, and maybe even a little bit something higher. Bitcoin, again, some pressure on that, down about 3.5% today. We had that pipeline scare yesterday. A lot of people very, very concerned for all the right reasons. Cyber attack and all the concerns there of where those prices will go. Well, part of the reason we're seeing a lot of this sell-off is people are very, very, or at least they're growing concerned about inflation, which is interesting to me because this has been going on long before yesterday. We've been looking at lumber prices skyrocketing, the copper price skyrocketing, the movement in everything from coffee to you name it, corn. We've seen this move, and all of a sudden it just was like a bell that everybody started to ring yesterday that, wow, inflation is here. Well, it's kind of been here, guys, but anyway, you got to trade the markets that are in front of you. So every single sector this morning when we started off the day was in the red. Technology, energy, communications, all down over 2% or more. So that was pretty telling. Then you have that beta energy, and we talk about this all the time, and that movement to the upside. Well, I mention it all the time as well. If it's moving to the upside because of the beta, it's going to do the same thing when we're moving to the downside. That's what you're seeing today. Let's highlight a name like Pioneer. This is a name that we don't talk about as much, but it's in that sort of category of the names that we bring up when we talk about beta. We talk about Devon and Oxy and a lot of these various names. But take a look at the moves that you're seeing in not only intraday, but the moves that you're seeing like we're seeing today from yesterday's trade as well. So just a lot of movement back and forth that we're seeing there. What was really under attack early on, and I'm sure it's going to be starting again as we're seeing the NASDAQ down a couple hundred points, those no PE names or extremely high PE names are certainly some of the names that people are going after. On top of that, seeing a little bit of a pullback. We just yesterday were seeing some highs made again. And when I look in the housing space, take a look at DHI. Now, this is one of the names. I like this name. I happen to own this name. It's had an incredible run to the upside, but it's under some pressure today. And this comes after hitting 52-week highs yesterday. But some of the pressures there, obviously, a lot of folks reading through this whole thing about inflation and going after different areas and going after some strength. Well, we've seen some strength in housing. That's a little bit under pressure today. We'll see if that's something that continues. Got two unusuals. We're going to get out of here. DraftKings is number one. DraftKings trading about 44.5. Really a name that's been all over the map. It's been up at some extreme levels. It's pulled back significantly. I get asked questions about this all the time on this name. I had not been in the name. I'm back on the name for this reason. I see a buyer of the May 48 calls. Now, these were going for, call it about $1 with the stock trading 44.50. They're hedging these, in other words, selling something against these, which is the 52 strike calls in the same month, May, where they're getting a decent enough premium that makes it a pretty smart trade, actually, in terms of you're capping your upside, but you're also putting out a little less money. You don't understand what I'm talking about? Market Rebellion's a place to come to get educated. We got the best in the business, in my opinion. But I do know that they are some of the smartest folks that you'll ever meet in the options world. So you're going to really have some great success if you want to learn a little bit more. Just check those guys out. Number two, IWM. I rarely give ETFs when I'm talking about unusual option activity, but this one definitely stands out for me. And what we are seeing here, and I want to make this clear because the other day somebody was frustrated about one of the trades, about what my commentary later. But again, I'm looking at this as a hedge. And why am I saying that? The IWM, the Russell 2000, we got a buyer of 21,000. Yep, 21,000 of the June 206 puts. And so the determination that you have to take is, are they buying these because they're negative, or are they buying these because it is a great hedge based upon a lot of different factors, volatility, time frame, and so forth? And in my opinion, from what I'm seeing here, I've seen previous trades in the IWM as well. It seems to me that this makes a lot of sense as a hedge. So could it be negative? Absolutely it could. Could it be a hedge? Absolutely it could. But it really does stand out. Those were going for about $4.45. So just to always have that information, I think, is very important. When we see SPY put buying, when we see, put buying in the triple Qs, all of those kinds of different things, especially in these ETFs, a lot more difficult to determine exactly what the rationale is behind it. But oftentimes you kind of get a sense of what we've seen in the past to maybe make sense of what's looking at in the future. And a lot of the time you can make that determination. I'm looking at this more as a hedge, and based upon where the markets are and a lot of the folks in the commentary that we hear day in and day out, some of the pausing or maybe pullbacks, well, this would make sense in either case, because protecting a portfolio or playing the downside, either way, if the movement is to the downside, well, then you're doing the right thing. Folks, have a great day of trading. Look forward to seeing you at noon, and I look forward to seeing you again later on today on the 5 p.m. show, Fast Money, halftime with Mel and the gang. Until then, I will see you then, or I'll see you tomorrow morning.